Hi there, this is Matt Shaw of FixedOddsSuccess.com. Now, if you were a trend trader over the last 3 months, you would in fact be on a profit. As you can see here, these low bars on this candlestick chart sold off down to 12,100, but as we peered above the 20-day and 50-day moving averages, we aligned beautifully, dipping below them, rallying back above before we dip back below. The baseline was the 50-day moving average throughout. We continually saw the 200-day moving average providing support on several occasions here with intraday lows middle of July and the end of July here on those two fairly substantial down days, particularly towards the end of July on the 25th, before the market then took off to the upside and has now regained momentum back above 13,000. So in essence, the last 3 months we've seen an average of a 300-point gain each month with this trend. And as we go back even further on the chart, we can see, this goes back, this trend goes back, well, yeah, it doesn't go back further than that really. Other than that, the trend broke to the downside. But since selling off remarkably back in May, we've seen that trend continue higher towards those levels, and this divergence here we see at 13.2, just above 13.2. We're not far off that now at just above 13,050. I honestly see the market shuddering at this point. We've failed once, we failed a second time rather vigorously, and I think this corresponds with the middle of August, when it's not a great time seasonally over the past few years. So the third time I think we're going to see a push towards this, even though we're progressively aligning perfectly and we're gaining the right momentum. We're not shooting up right back towards 13.2, seemingly all too quickly, but what we're seeing is a nice measured move back towards this level. Many would say we're going to burst through this 13,300 level. We could do. Personally, right now I see quite a devastating sell-off for the Dow Jones. Not many people are calling that, especially with the elections up into October. Some people are saying, well, Obama would like a strong market to show that the markets are doing well and that everything's under control. Forget his NDAA approval, forget a lot of other things, forget his Obamacare, forget all that else. If the markets are doing well seasonally around September, October, before these elections, it does the world of good for the candidates. But then again, if the markets were in trouble, why would anyone want to select Romney to come on, the GOP to come up and really change things? So to be honest with you, I genuinely see a stark sell-off here. Whether it will continue up to October, I don't know, but I see up until the middle of September quite a stark sell-off, and maybe beyond that. Okay, there's no other reason for now. I mean, technically volume is fading. We're into the second week of August now. It's very thin anyway. A lot of people are away from their trading desks. Holidays galore, which I'm taking a holiday next week also. 13,250, 13.3 is a level I'm looking to sell. I've already started to short sell. I picked up some nice puts for my options. I've spread betted here at 13,190 as well. I'm in on that short for £50 a point. I've got my stop well above 13,400, so I'm not too bothered. I'm just going to let this market roll. When I get towards 13,250, if indeed we do get that high, anything above 13.2, I'm placing a high no touch on my fixed odds account at 13,450, and I'm selling the market again fresh at £100 a point. And I'm telling clients to do that also. What else will be in store for the rest of the month? Who knows? I'm going to wait until after the Olympics to update. But for now, it's over and out for me. I know exactly what I'm doing. So any questions, please get in touch at matt@financialtrading.co, or alternatively matt@fixedoddssuccess.com. It's been a pleasure. I will be in touch very soon indeed. Thank you very much.